Hey, what's up, Fanbase family? We're here for the September 25th edition of Fanbase Finance Audio Experience. And now I'm going to tell you how the money moved this week for our update. Number one, housing surprise. So new home sales jump. So new single family home sales surged 20.5% in August to an 800,000 annual pace, a 3-year high, helped by lower mortgage rates and builder incentives. So economists are split on how durable this is, but it's a real pop. So why does this matter? So builders are dealing, rate buy downs and price cuts are back on the table. If you're shopping new construction, negotiate hard on closing costs or a rate buy down. All right, mortgage rates. So mortgage rates are down again, so that's making refinances really wake up. So the average 30-year mortgage drifted lower again last week. Freddie Mac states that refis are approaching 60% of applications. Wow, so 6 out of every 10. The highest since early 2022. So if you were quoted, say in July or August at rate, if you're in the market for buying a home and you're going to finance it that way, an eighth of a quarter point can make a difference. I look for something bigger, but for some people that makes a big difference. Number three, Main Street backdrop. So growth cools without a price spike. So business activity cooled further in September, and firms report little ability to raise prices, right? A combo that points to a softer growth without a new inflation flare-up. So that's a friendlier setup for the Fed to keep easing gradually like they did, which helps credit cards, small business lines of credit, and even auto loans over time. Number four, labor market. So claims snapped back after last week's spike. Weekly jobless claims fell to 231,000 in mid-September after a 1-week jump, tied partly to fraudulent claims in Texas. Big picture, hiring is cool, but the floor hasn't fallen out. So job seekers expect some slower processes through the fall and winter. Business owners, if you have a business that's hireable, that hires people in real life, better candidate pools, and be selective on your skills and your competition, or compensation, let me say that, competition too. Number five, everyday costs. So gas is steady, small wins for budgets. So the AAA national average is hovering about $3.16 per gallon, flat to slightly lower week over week. Though the Pacific Northwest, shout out to Bianca, saw brief spikes from a pipeline issue. So if you raise delivery or service call fuel surcharges, consider trimming them to stay competitive if, again, you're in distribution business. Number six, rents and housing supply, a little relief. So new home strength contrasts with still soft existing home activity, but broader for sale inventory is improving, and rent growth has cooled into late summer. So if you're a renter, use the seasonal lull to negotiate. Buyers push for builder incentives and rate buy downs like I mentioned earlier. Number seven, this is a big one to watch. So from a policy perspective, let's talk a little bit about TikTok. So the White House is set to sign an executive order, essentially executing a deal that shifts TikTok's U.S. operations to a consortium that's led by Oracle and Silver Lake under requirements of the 2024 law. Expect timelines and governance details to sort of firm up over time. If you're a creator, you're a brand, you're an agency, you want to get more clarity on ad spend as it relates to TikTok and audience strategy as you go into Q4. And then finally, number eight, another big piece to watch that for all of us is the potential looming federal government shutdown and firing plans, right? So the shutdown risk is ticked up here. We're about 5 days away. Reporting says firing plans are being readied if talks collapse. Right, contractors and agencies could see delays or disruptions if a government shutdown occurs. So if you're a federal contractor, right, shout out to my bro Leonard and some other folks, review your cash buffers and your receivables. Consider temporarily tightening payment terms with customers that depend on those federal flows. So that's the news for this week. One other thing I want to share is I had a great week. Shout out to Operations Hope led by John Hope Bryant there. Location here I've been partnered with for many years, and they had the highest number of people graduate from their entrepreneur cohort this week. So I had the opportunity to be the speaker And there are about 35 entrepreneurs that we're going to fund anywhere from $25,000 to $50,000 to help their business. Many of them are young businesses. Some have been in business for a couple of years, but definitely shout out to Operations Hub, shout out to First Horizon Bank as a partner, and then for us at River City Capital, being a funding partner for these Black entrepreneurs, man. A lot of energy was in the room and very dynamic, so I was excited to be a part of the celebration. So with that, speaking of celebration, let's get back to the conversation in the room. Fanbase Finance.